Well, you guys have been asking for it, so it's time to make a video about 5 of my favorite ultra high yielding ETFs that can generate a massive amount of income with a relatively small amount of money invested for investors. Now, every single one of these ETFs, I personally do hold on to some shares of, some more than others, and all these ETFs are going to be somewhat risky in their own ways, just like anything else in the stock market. Now, every single one of these ETFs yield anywhere from 14% upwards to north of 100%. So like I said earlier, these ETFs do have the potential to earn a substantial amount of income from day one. Along with that, they all have a positive total return, and they have all made investors money since inception. So if you want to see which 5 of my favorite ultra high yielding ETFs I personally like and also have invested into, make sure to stick around, drop a like down below, and let's get right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the first ultra high yielding ETF that I am a big fan of, and I do own several hundreds of shares now, is QQQI, or the NEOS Nasdaq 100 High Income ETF, which currently has a distribution rate of over 14%, which is massive. This ETF has a pretty interesting strategy, and although simple, it has worked pretty well since inception. This ETF basically earns high income from investing in the constituents of the Nasdaq 100 index, but also by selling covered calls and buying call options on the NDX index. This ETF has the potential to generate a massive amount of income from day one. Now, ever since this ETF's inception, it's been paying investors like myself and like many others anywhere from around 59, 58 cents upwards to 60 plus cents on a monthly basis, which is incredible for an ETF that costs around $50 per share. Now, if you don't want to have any Nasdaq 100 exposure, this ETF probably will not be the right one for you. But for me personally, I do like having index exposure, especially Nasdaq, because it is a little bit higher beta, which means there's the potential to earn a bit more income on some of these more income-focused ETFs that utilizes the Nasdaq 100. And like I promised, ever since inception, which is only around 0.8 years now so far, QQQI has returned investors around 18.11%, and this is with the distributions being reinvested, around 17% with them not. So not the highest returns that we've ever seen across the market, but very consistent and so far so good. Hopefully this one keeps doing well in the future. Another one of my favorite ultra high yielders is one that I've been buying for a while now, and I have definitely talked about this one on other videos. I'm talking about SVOL, or the Simplified Volatility Premium ETF. Now, this ETF utilizes a portion of the portfolio to short the volatility index, but as you can see in its holdings, it also invests in different bond ETFs and different funds. It's pretty well diversified if you ask me. Now, the distributions for SVOL have been anywhere from 30 cents down to 28 cents as of recently, which even still is offering investors like myself around a 15-16% distribution rate, which is massive. Now, although SVOL, because of the name and because of the breakdown of how it works, some investors are turned off by it, but if you really look into the holding breakdown like I mentioned earlier, this ETF is actually pretty well diversified, and it's not only shorting the VIX. Now, just as of recently, I did actually buy a little bit more SVOL, although my personal position is pretty maxed out at this point if you ask me. Now, as promised, SVOL also has made investors money over time as far as the max time frame. 3.5 years has been trading, and we're talking anywhere from around a 10% average annual return, with those distributions being reinvested, or around 8.2% with them not. Again, not saying it's the best returns we've seen historically, but it is an ETF that has paid investors massive tax-efficient distributions, at least historically. Now, another one of my favorites that I have also been grabbing some more shares of as of recently is SPYT, or the Defiance S&P 500 Income Target ETF. Now, this ETF aims to achieve an annual income amount of 20% in the S&P using options, and these are paid out monthly. Now, it says our strategy revolves around holding shares of an ETF that tracks the S&P performance and engaging in selling of daily credit call spreads on the index. Now, because of this, there is the potential for a massive yield, which is targeted to be around 20, and so far since inception, again, it's only been trading since 3/7 of this year, but this ETF has paid out anywhere from 32, 33, 34 cents pretty consistently. And as promised, SPYT also, just like the rest of them, has a positive total return. Over the past 0.69 years, SPYT has returned investors a total return of around 14-15% with those distributions being reinvested, around 13% with them not. Either way, not bad whatsoever. Consistent income for investors, at least up until this point. A few more to go through. This is one of my favorites that I've also been buying throughout this last year. Just a small position of it because I do personally think this one's pretty risky. But we're talking about ZIVB, or the -1x short VIX midterm future strategy ETF. And this ETF, similar to that of SVOL, only a little bit different, does short the volatility index. And as you can see right here, their holdings are loaded up on that aspect. Now, if you believe that generally speaking volatility is going to remain calm, then shorting the volatility index is going to be a good move for you. But if you think volatility is coming, then probably don't invest into something that's directly shorting it. Now, so far so good with this ETF with a 31+% distribution rate and a payout of around 48 cents every single month for an ETF that costs somewhere in the $20 range, if I'm not mistaken, is massive. But the most shocking thing about ticker symbol ZIVB, for me at least, is that this ETF, because of the price return as well as those massive distributions, has returned over the last 1.58 years around 41% on average, with the distributions being reinvested, around 40 with them not. So as far as the ultra high yielding world, this is up there with some of the best returns I've seen. And again, take it with a grain of salt, it's only been trading for 1.58 years, but still, so far so good. Now lastly, you guys might be surprised about this one that I'm including this one in my video, but one of my last favorite ultra high yielding ETFs, this is a position that's very small in my portfolio, but I do own some shares of it, is CONI, the YieldMax Coin Option Income Strategy ETF, which has a distribution rate of 175%. Now, why in the world do I personally own any shares of CONI ETF? It's simply because I do believe that Coinbase and of course Bitcoin and crypto in general is probably going to do pretty decent over the next year or so. And what better way to get exposure to all that upside and all that income than buying into CONI? Now, like I said, I only own a small position. I think I maybe have 40 or 50 shares across all my portfolios combined, but with distribution rates of $2 plus on a monthly basis, and even $1 sort of on the low end, this ETF has the potential to pay back your initial investment in a shockingly short time frame. And this is just if things keep going the way that they are. Now, again, I do think this one is extremely risky. There's lots of arguments to stay far, far away from all the YieldMax ETFs, and I personally have made some of those arguments myself in the past. But the math is still the math, and over the last 1.25 years, CONI has turned an investment of $10,000 into $24,000 plus, and this is with distributions being reinvested, or around $10,000 into $19,000 with them not. So whether you're a fan of YieldMax, whether you're a fan of Coinbase or CONI, the math is the math and the returns are the returns, and this ETF has had a heck of a 1.25 years as of so far, and even if it does decay over time, the distributions are just something too juicy to give up. So there we have it. Those are 5 of my favorite ultra high yielding ETFs that I personally hold across my portfolios as we speak. Now, as you can see in my long-term portfolio, I own mostly staple names. I own names like JetB, like JetQ, like Apple stock, Verizon stock, Devo. I own a lot of solid foundational names. And then with a small portion of my portfolio, I own things like 35 shares of ticker symbol ZIVB. And that's just because my risk tolerance is a little bit too low to buy a massive portion of any of the ultra high yielding ETFs that we talked about. But still, utilizing some of these ultra high yielding names to get your total yearly and total monthly income up substantially could be something that some investors are looking to do. But now lastly, most importantly, I want to hear from you guys down below. Out of all the ultra high yielding names across the market as of right now, which are some of your favorites? Drop the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.